I'm gonna leave that on. Oh, wait. I learned how to pause.
Held. All right. Another piece is if you don't have, and this is my fault, Colette, I should have told you because you asked me if I need anything. If you have one sheet of paper, I think you'll be fine. If you don't, you might want to grab one sheet of paper. I don't do a whole PowerPoint and all that. I just feel like, you get enough information. But if you have one piece of paper, that'd be great. And you'll see that I folded it into quarters, right? And each one of those boxes will be plenty for jotting down a couple gems that you're going to need in each section that we talk about. Okay, so if you don't have that, take a few seconds to go grab a piece of paper, fold it into quarters, and then we'll go from there. So a little bit about myself. I am a commercial risk advisor, which is fancy for commercial insurance broker. I have been in the business, it'll be 19 years coming up this year. No, coming up 2022. And 12 years of that time, I started and ran my own shop. So I started and had my own agency. So when I say I really understand what you guys are going through, I too am an entrepreneur. I know the butterflies you feel. I know all the hats that you got to wear in the future. So we're not just talking about insurance, we're also talking about just the overall concept of entrepreneurship. And so I ran my agency until last year. I sold my agency last year and jumped in with a co-op. So Consolidated Insurance, that name is by design. It's a bunch of agents who were very similar, had books of business, and maybe just wanted to get out of the operations of it all. And we came together as a unit and started our own thing. So that's what we do. I do a lot of these types of things where I like to get out and educate a lot of people on risk and risk management, because I personally feel like it is one of those forgotten things or ignored things that just gets left out when you're talking about running the business. So that's why I'm here. Any questions about my background or anything before we jump right in? Everyone have a sheet of paper? Good, good. All right. So very, very high level, Colette sent me over a list of the attendees and on that list was also people who had their ideas of what businesses they're in or they want to go into. That's important because when you're talking about assessing your risk, the starting point of it all is what you're exposed to, okay? So just a quick definition of insurance. Insurance is really, really simple. It is the transfer of risk to a third party, all right? That's it, transfer of risk to a third party. However, okay, that's not the only way to address any risk that might come your way. So when you're an entrepreneur, you're thinking about, okay, I'm setting up shop to open up a food truck and I'm selling tacos, right? A lot of things are going through your head about, okay, what do I need to protect my consumers if something were to happen in my product? And a common misconception about risk management is the only way to address risk is to get an insurance policy and you're protected and go from there. That can't be further from the truth. So we're going to talk, when I list this out, it's really going to be the only time we talk about this. I won't dive into each one of these. We're going to focus on the last one and you'll see. So the 5 ways to address any risk, okay, there's 5 ways. First one is prevention, meaning you can get out of that game altogether and just don't do whatever it is you're trying to do, so you prevent the risk. Mitigation, you have protocols or some kind of regulations in force so that if something were to happen, it doesn't impact you as much. That's mitigation. Transfer, meaning you have some mechanisms in place to push or transfer that risk to someone else. So you operate your business, but someone else is taking the risk.
okay? The perfect example is my 9-year-old went to a birthday party, and it was like at like a trampoline park, and everyone's in line to sign the waiver. That's risk transfer. So we know the risk is there, but they're transferring a portion of it to the buyer, okay? The fourth one is assumption. So you know the risk is there, you know how much it's going to cost you, right? But you choose to assume it. So maybe what you're going to lose or what is at stake is not a lot, right? The key piece to number 4 is when you're assuming it, you need to know what it is. So if you know what it is, you're fine with it, you're assuming it. We call that self-insuring it. Okay. And the last one is financing it. Okay. So you know the risk. However, it may be too big. You don't want to run the gamut of, your assets being in jeopardy. So you finance it. And that's where insurance lies. So insurance policies lies in number 5. Okay. So the ways you address with risk are 5 ways: prevention, mitigation, transference, assumption, and financing. Insurance policies are in the bucket in the number 5 slot. So the way you finance your risk is you buy a policy. An insurance company says, hey, we associated this risk with a certain price. We assessed it. And if you give me $1,000 a year, when something happens, we'll respond to it on your behalf rather than you. So in essence, you're taking your small bucket of money, premium, and you're buying a bigger bucket of money, right? Policy limits. So that's how policies work. Okay. Any questions about those 5? We won't talk much about 1 through 4 at all. Again, that's more of the risk management. We're going to talk specifically about insurance. So we're going to assume, for the sake of this, that we have walked through 1 through 4, and all you ladies gotten to the point where you know that insurance policies are the best things for your business. That makes sense? Questions of 1 through 4 before we get in? All right, remember, use the reactions if you can. I can see it on my end. I'm staying in gallery view just so I can see the hand raises and all that. So, all right, so insurance policy. So if you have your sheet of paper, okay, 4 buckets, all right, there's really only 4 places that risk lives in the commercial side. Actually, all insurance, whether it's personal, business, there's only 4 buckets of risk, all right? Those buckets, and you can write in these squares, okay? It's liability, property, auto, in this case, commercial auto, or workers' comp. Those are the 4 buckets of commercial risk, okay? Liabilities, property, auto exposure, or workers' comp exposure. Now, there are a bunch of different versions of, of all the, for example, there's hundreds of different kinds of liabilities, and every business needs separate liabilities, but they all fit in a liability bucket, okay? Every business is going to have their own separate properties to insure. So everyone's going to look different. Some businesses have commercial auto exposure, some don't, right? Some businesses have workers' comp exposure, some don't. So the reason we're doing this way is because everyone's business is going to be different. And this might be the most customized piece that you sit through in this series, because none of you guys are going to be the same, right? I can't tell you how many times I wrote, how many different hair salons I've written, over 20 years. None of them are the same, right? So you can imagine. So first things first, you got to understand your business, and then we can talk about those buckets. So quick exercise. How you assess your business are a couple different questions, all right? Because you want to know what bucket you primarily going to live in, right? Where is most of your risk going to come from? All right. So if you have a business, first of all, let me get a little tally. Raise your hand on the reactions if you're here and you don't know what business that you're going to pitch or you want to live in.
Sakina. So we have one person that is just, just doesn't know yet. And that's fine, Sakina. Two. All right, that's fine. Okay, so for this exercise, you'll be okay. I think we have more than enough people that can do it so that we can get the data we need. All right. So couple things. One, risk is divided upon industry and job function. Okay. So you have to tell yourself, what industry am I in? And then what job function do I belong to within that industry? I'll do mine first. Okay. Insurance lives in the financial services industry. Okay. So we're in the same industry as financial planners and Wall Street guys and all that, right? It's one industry. Finance is only one industry. There's a bunch of sectors, but my industry is financial services. Okay. My sector obviously is insurance. Okay. So those are the two spaces. So when an underwriter looks at me, they pull up my industry and all the risks that I'm exposed to in that industry, right? Then they pull up my sector, right? Okay, that either gives them more exposure or it takes away some exposure. And then within that sector, what am I? So I'm financial services, insurance sector, and me personally, I'm an insurance broker. So I'm an insurance sales bucket. So we want to drill down those three buckets, take a few minutes, do that exercise, and get it to the least common denominator, right? At least 3 steps: industry, sector, job function. And when you're done, just shoot a quick hand raise so I know. A few seconds, a few minutes. And Teresa, if you're out there, whenever you figure out the question you want about transfer, just chime back in.
I can do it now if you'd like me to.
Sure.
Okay, so I think I'm trying to understand the terminology. So you said mechanism to push the risk to someone else. My business is a service organization, and I am not the manufacturer of the goods that I provide the service on. And I guess I'm trying to put it in my head to understand the transfer process. Is it enough for me to say the country of origin of the goods if there is a failure with the product that I didn't make? All I did was provide the service to the product. So I don't know.
Is that enough to what? Absolve you of any responsibility?
Yeah, is that where this whole transfer term comes into play?
Yes, that's how transfer works. However, the second part of that is no. And we're going to get back to the exercise. Let's talk about what risk really is, okay? One, you can't absolve yourself of all risk. There's no such thing, right? Risk is like the cold virus, right? If you don't have a cold, that doesn't mean that the cold virus is not out here, right? Somebody has a cold, it's just not on you yet, right? So that's how I want you to start thinking about risk, okay? You can't absolve yourself of all risk. What you want to do is manage it, though. You can do things to manage it so that if something were to happen, you can take care of it financially, okay? So in your case, you're the middle person. Someone manufactured the product, right? You get it wholesale, whatever it may be, and then you go to your end user. You're in the middle. So you have 2 buckets of risk to manage, okay? So when we talk about transferring, the main reason, I guess the most popular way to transfer risk is via contract, okay? So the manufacturer undoubtedly is transferring a lot of the risk, or at least as much as they possibly can, to you. So when you sign that contract with the manufacturer, you're accepting risk, all right? What you should be doing is, at the very minimum, pushing what you took off to someone else. If not, the net of that is you took more than you should have. That makes sense? So when you're in the middle, the transfer game is very, very, very important, because you took someone's risk, made it your own for the purposes of good business, for business practices. But if you keep it, then now we're into assumption. You got to know how much you're keeping, and then you got to do something with it, right? You know how much it is and you're assuming it, or you know how much it is and you're gonna get policies to protect yourself from it. I saw the thumbs up. Did that make sense? And for anyone else, you know, if someone asks a question personally to their business, anyone chime in, because again, a lot of this is interconnected. All right, so where are we on the exercise? Who wants to go and volunteer their little scaffold? In person, not in the chat.
Okay, I can do it in person.
I was
I'll put it
going
in
to
the
say,
chat.
if you're on a pitch competition, y'all gotta get familiar with talking.
Okay.
All
So I think my industry is healthcare. My sector is counseling, psychology, and coaching, and my job function is licensed therapist and career counselor. So I do have a liability insurance of a whole different kinds for my therapy practice, including like slip and fall if somebody gets injured at the location where I have my office.
Mhm.
But I also have a nonprofit, so I think I need some board liability, and I probably need some kind of volunteer liability insurance, which I haven't looked into yet. Our nonprofit is new.
Mhm.
So yeah, I don't think I need workers' comp at this point because I don't have employees. And we don't use auto, we don't use cars at all for what we
Mhm.
do. So yeah, anyway, that's what I
Good.
got.
Good. I like the breakdown. We heard her industry, we heard her sector, we heard her job function, right? That's good. And she even went to the next part, which I was going to do, was
Oops.
I want you to start thinking about which one of these buckets your business lives in the most, right? Which ones are you exposed to? And she did that for us. So good. Who wants to go next?
Can I go next?
Yeah, whoever that is.
Yes, I'm Isis.
Isis.
So the industry that I'm in is healthcare. The sector is the service industry, and the job function is a massage therapist. And I'll go ahead and do the next part too.
Mhm.
I have liability insurance to protect myself as the therapist, the client, and property insurance for all of my things in the studio that I'm working at.
Good. Thank you so much, Isis. She
Thank
broke it
you.
down. Good. Healthcare, service, and what was the last one again? I'm sorry.
I'm a massage therapist.
Massage therapist. There you go. Good. Let's do one more.
I can go.
Let's go, Shelly.
You've
You've been laughing. She's been laughing a lot.
I like to laugh. It just makes my day so much better.
I know. Let's go.
It's better when you laugh. So I think my industry is personal services. I think that my sector is coaching, and I believe my job function is life coaching. The area of insurance will probably be more so under the liability section.
Okay.
I don't have it currently, but I'm here to learn.
Right. No, that's fine. That's fine. I would say personal services is massive.
Yes.
So we want to drill down a little bit on that. And then what was your second one again?
Coaching as the sector.
Okay. And then your last one, what was your job function again? What do you
A life coach.
You're a life coach. Okay.
Mm-hmm.
So I would say, I want to dig a little deeper into personal services, because if you're a life coach, and this is for the purposes of underwriting, right? For purposes of underwriting, you're not necessarily in a different bucket. So someone who's a licensed therapist may get they may have a better premium because they're certified in something they're licensing. And I'm not saying you aren't, but when you hear the word coach, it says, hey, I got some expertise in something and I'm gonna go and help. You're more of a consultant than you are a certified therapist or something. So I would say not necessarily personal services. I would say, well, let me ask you, who are your clients? Are they individuals? Can it be anyone? Okay, okay. So maybe personal services would be it. But I can tell you this, the more you're defined, and this is for everyone, the more defined you are, the better, when you're financing, the more defined you are, the better the premium. That makes sense? And the only person, because there's two people who can define you and the underwriter. And I promise you, you want you to do it. Because an underwriter is not going to take the time to go through this exercise, right? They're going to say, okay, you're a life coach. Okay, we got a price for that. Here's that price, right? And it includes every facet of any kind of life coach you can be, right? So they're going to charge you as if you're doing it all. What you need to do is define yourself and say, hey, I don't do this client. I don't do that kind of client. I don't do clients that were in accidents. I don't, you need to start taking away. And this is for everyone. Because if you don't, the underwriter is going to put you in a bunch of different buckets. You got to really, really stream it down into what you do.
Could I answer that?
Sure.
Given the information that you just shared? So I think that what I focus on is goal success.
Okay.
So I'm a certified life coach, but my focus is on goal success.
Right.
So helping women to accomplish their goals. That is my focus.
Right. Okay. And that's fair. Again, these are your businesses, right? So you have to be able to articulate where you live and what you do. Real simple. Where you live, what you do. And for the purpose of insurance, most importantly, what don't you do, right? To an underwriter, what don't you do? Because I'm letting you know, an underwriter starts with everything. You need to be able to say, I don't do this. Or I know you're used to seeing this in this field, but I don't do that. Okay, good. So we got our buckets. And I want to get this part over really quickly before we go to, I think our break's at 7:45, right, Chloe? All right.
Yes.
So we have our buckets, all right? And hopefully everyone has at least an idea of where they live. And the thought process is, what are you most vulnerable to? Now, are you going to live in multiple buckets? Absolutely, right? You're going to have multiple. But you want to know what your number one exposure is, okay? And that just means, where are you most vulnerable? For example, if I am, let's just use me, right? I'm a consultant. I already told you my sectors. I have all the liabilities and everything, but I'm most vulnerable in the professional space. The product I'm giving you is my expertise. So professional liability is my main exposure, right? Yeah, I have an office, but not a lot of people's coming through there slipping and falling, right? Yeah, I have a company car, but it's my car, right? I don't deliver stuff in it, right? Yeah, I have employees, but it's not a lot, and we're behind desks all day. We're not building buildings, so it's not a lot of room, not a lot of chance of injury, right? So if a claim were to happen against my business, it's more likely that someone would file a claim against my business for something I told them that was totally incorrect. It's not likely that someone's going to hurt themselves at the office. That makes sense? So what I want you to do is take it that next level. You should be starring or circling or putting some kind of notation in the box that is your lead-off exposure. All right, your lead-off exposure. So if someone came to you and said, hey, look, you're only allowed to buy one line of coverage at a time, what would it be? That's what I want you to get your head around. That's your lead-off exposure. We got a few minutes. So if you did not volunteer the first time around, let's hear your lead-off exposure. I told you mine was professional liability. And that just means my product is expertise, right? And anybody out there who has professional liability or your product is your expertise, which means you're consulting, you're a therapist, you're any kind of professional services, right? If you had to go somewhere to a third-party authority to take a test and they had to tell you you're good at it now, so here's a license to do it, you're a professional. That makes sense? And you have professional liability exposure. So anyone else want to say theirs really quickly before we go? All right, let's hear from, yeah, I'm going there. I'm going there. Let's hear from Camilla. Is it Camilla? Camilla, you there? Mia, you there? Uh-oh. Mia, you chimed in?
Yes.
There we go. You know where you live?
Hold on. Back and stuff down.
Anyone else? While she's Nick, you there?
Yes.
Who said that?
Mia.
Okay. Mia, what is your most vulnerable? Where are you most vulnerable in your business?
I guess the liability would be the, I don't know, I guess this is a liability, equipment. So if I'm doing an event for someone and I'm putting up, let's say, backdrops and things that could possibly fall, that's a liability.
Right. What's your business?
As event planning, event design and planning.
Okay. So you're an event designer. So anytime you hear the word design, anytime you hear the word plan, that too is professional liability. All right. Because again, they're trusting your expertise, right? So yes, you are putting things up, right? But and correct me if I'm wrong, Mia, I'm assuming you're sourcing that stuff out, correct?
Yeah, sometimes yes and sometimes no. So what I do, and I guess this does help cover myself some, I do have an insurance policy that I require them to have when I'm doing events.
Mm-hmm.
Okay. And in most places like the Marriott and some other venues, you have to just to walk in and vend with them, period. As a vendor, you have to carry $1 million insurance policy per event.
Mm-hmm. So what we heard, guys, is she's got a couple things going on. She's got some transfer going on, but she's also an intermediary, right? She's a planner. So she plans functions at these locations that she does not own, right? So there's some transfer in there, undoubtedly some transfer. They're making her sign stuff, but she's also making her vendors, the people that are setting up, whatever it may be, the third-party people that she's using, she's also making them sign some stuff too. From a policy standpoint, we got a couple things: professional liability, right? Basic general liability, and the difference between professional and general we'll talk about when we talk about the liability bucket. Okay, if she has employees, she has that. Even if she does not have employees, she has workers' comp experience, and we don't have enough time to get into that, but we will. You do have exposure if you don't have employees for workers' comp. So I would say those three, but I would say most vulnerable would probably be liability. Absolutely correct, Mia. Is it Mia or Maya? Thank you, Mia.
Mia.
Absolutely correct. Liability, definitely. We have what, 2 minutes? Can anyone else want to go? If not, I think we can cut
It's
early.
Teresa, I'll go.
Okay.
I think my most vulnerable is property, dealing with the products that I provide my services on. And I'm not sure about the liability piece, but I do design work in order to do layouts, and I guess I probably need to tell you what my services are. It's engraving, okay, as well as sublimation. So in order to use that technique, I have to do some design work if the customer is not coming with their own.
Okay. All right. So let's break it down really quickly. Some of the same exposures, but I would say the key pieces to you would be, yes, there is liability exposure because liability covers property damage of others. So anytime you're taking someone else's stuff, right, and you're doing anything to it, you have a responsibility that their stuff gets back to them either enhanced based on what you did to it or the same, right? So yes, there's liability exposure for that, but there's a very specific piece of liability. There's a specific liability that's called personal property of others or care, custody, and control, right? It's what the dry cleaners has. It's what, you know, anytime you take your property to someone else to do something to, they have a policy called care and custody and control. And that's what it is. And that's what you would need. Now, in lieu of that, you would have an umbrella policy, which would give you coverage if you didn't have the care, custody, and control. But again, your responsibility would be to give that property back, you know, with the service that you provided correctly. If not, then yes, they're going to sue you and they're going to want to be paid for their product. So I would say, yes, most vulnerable is liability, but there is a specific liability that is unique to you because you're taking other people's stuff in. Any questions? I saw the umbrella question. We'll answer it on the other side. We're going to have fun with general liability because general liability goes, you know, in a bunch of different directions. So when we come back, we're going to break each one of these buckets down. And then after that, I'm going to ask you to revisit your stuff again to see if you still feel the same. I'm good, Colette, if you want to do the break. Or you want me to keep going? I don't hear her.
I'm here.
Okay.
I had to move the camera over. Okay, well, you know, it's break time. Mr. Harrison said that this wasn't sexy, but I think we're finding it to be just a little sexy because you all are participating in the conversation.
I appreciate it.
And so I suggest that you keep your attention and your eyes on him because you never know when you get called on.
Oh yeah, I'm gonna call him.
Look, he's that teacher.
Yeah, I'm that
so
guy.
I'm gonna ask you if you wouldn't mind taking at this time the slight break and join us again at the 8:00 hour. 8:00, okay? So take your break, get some water, do a little stretches, do jumping jacks, whatever. Keeps you alive until 8:30. So I'll see you at 8 o'clock, all right? See you soon.
And Chloe, did Chloe leave?
No.
Oh, well, everyone's still on here, so it's no different. I didn't want to dish you in front of everybody, but I saw that Morgan State picture, which is why I turned mine off. Look, yeah, you see it, you see it.
It's two of us
You
here.
see it.
DeCarlo, it's two of us here.
I'm repping us every
Two?
day.
Oh
Every
man, Shelly, you know what? How would I should have known Shelly. I should have known. University of Northwood Plaza. That's what it is. Two of them. Had I known that, I definitely would have declined this. I'm just letting you know.
Oh,
Wait
wait a minute.
I'm not in the business. Look, I'm not in the business of teaching y'all what y'all school should have taught y'all from the beginning. Woo.
You got jokes.
Yeah, shots definitely fired.
Yay.
His reference didn't tell me he had all that in him.
That's fire.
Man.
Shelly, you're not gonna defend me? We were both so happy.
You know I ain't
Listen, I'm just here to get what I can get.
There
That's
you
what you
go.
learn at Morgan. You
Yeah.
get what you can get, you do what you gotta do, and you keep it moving.
You gotta go to the people with the information, Shelly.
Hey, because we know the truth.
That's
We
right.
know the truth at Morgan. We know the truth.
Yeah, we do.
Y'all got pretty buildings though. I'll give you that. Y'all got some new
Right,
buildings.
right.
The
Oh
meal
my
plan it's really improved.
Yeah,
Okay, so
yeah,
we
yeah,
have
okay.
food too.
Y'all
The
can't
meal
do
plan.
Oh, Lord.
Exactly,
All right.
Teresa. I'm not taking on that liability. Nope.
There you
Not
go.
doing it.
Transfer.
I'm going on the break.
Walk in quietly, come and be loud. I don't want him coming in crazy like, yo. Yeah. Okay, it is 8:00. Shoot me a quick hand raise or something to let me know you're in the building. Good, 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 good. Nice, nice. Good, good. We had a couple questions before we left. Somebody asked about an umbrella. I believe that was Sakina. Okay. And we'll get into umbrella. Umbrella is a form of liability, so you know, so it exists in a liability bucket. But all umbrella does, and you'll hear it called umbrella or excess. And there's some differences between them, but that's what it is. All umbrella really does is it sits on top. So if you got your 4 buckets on your page, if there's a way to like put umbrella on top of that bucket, that's exactly what it is. So it's padded liability. It's extra liability limits just in case the underlying liability is not enough. For example, just think about our personal auto, right? If you hit somebody, let's say you have Maryland minimums are 30, 60, 25, I believe, or 30, 60, 15, something like that. It's real low, right? 15 is your liability limit. So 15 represents 15,000. So if you hit somebody with a $20,000 vehicle and you total it, you're in the hole $5 grand, right? Your policy only has 15,000 in liability, but the car you hit did $20,000 worth of damage. So if you had a personal umbrella, that umbrella would come down and protect you and respond to that other $5,000. So that's how umbrella works. And it works the same way on the commercial side. So yes, it's absolutely a good idea to have umbrella where needed whenever you have elevated liabilities. It's not mandatory by any means, but you'll see on commercial policies, especially when you're in the business of contracting business. So you're doing deals with people, you got event places wanting you to have stuff. They're always going to require umbrella because again, umbrella is liability. And that's a good segue into that first thing we're going to do is we're going to start to unpack these buckets. And yes, we can start with liability. And the main thing you have to understand about liability is that it's not yours, okay? Liability is a third-party coverage. It's never, ever, ever going to pay you. So it's limits that you have for somebody else. So in this example, that $20,000 car, you're paying that off your liability for them. You hit them, right? If your business, if you're selling hamburgers and that person gets sick off one of your hamburgers, that liability, they're gonna put a claim in against your liability policy, and that liability policy is gonna take care of that. Right? So liability never is gonna pay you. Anytime you hear the word liability, it's not for you. Doesn't matter if it's commercial, personal, you got homeowners liability, you got auto liability. Anytime you hear the word liability, that just means it's for someone else. Now, sometimes it gets tricky because people require you to have it, or you don't necessarily know if things are packaged together, what you're buying. So that's where a question comes into your agent. Hey, unpack this package. You hear the word package a lot, right? Unpack it and let me know what I'm paying for, right? Because a lot of liabilities are packaged together. So that's umbrella in a nutshell. It sits on top of the liabilities. So we're going to go through and I'm going to kind of give you like one or two bullets for each bucket so that you understand what they actually cover. Okay. First bucket is liability. Again, definitely jot down. It's a third-party coverage. It's not for you. And it protects you against your products and completed operations. Products and completed operations. So if you have a physical product that you're giving to someone, right? They get sick off of it, they sue you, that's products. Let's say you're a contractor, you don't have a product, but you completed an operation. You went to someone's house and you painted something, right? But the paint made everybody sick. That's completed operations. Let's say you are a counselor, right? You don't have completed operations. You don't have a tangible product, but guess what? You have an intangible product. Your product is your expertise. That's a liability. Okay. So what you should have in that bucket is it's a third-party coverage, never covers you. So it's for other people, and it covers you against product and completed operations. There are a couple other things too. Some of them are just ancillary. The only one that's probably only worth noting on that bucket is damage to premises rented to you. All right, so it's product completed operations, but maybe also make a note that it covers you against damages to premises rented to you. And that's also known as fire legal liability. So let's say you're a tenant, you got an office space, or you got a retail space, you don't own it, someone else owns it. And there's a fire, and they do a research, and they adjusted the claim, and they realize that the fire was your fault, right? Then that property is not yours, but it was leased to you, right? So it's damage to premises rented to you. If it was your property, then what policy would reply or respond if it was your property?
The property.
Your property coverage, right? So this is one of those rare occasions that property does not even come into effect on a property claim. If it's not your property, it's liability.
Carlo.
Yep.
I see, unless the hand has been up for a while. ISIS.
Oh, ISIS. Sorry, ISIS.
I don't
Thank
have
you.
a question. I left my hand up on accident, but I guess I actually do though, because when I got insurance for massage therapy, I got it through like the website that I had a massage membership with, the American Massage website.
Mhm.
And when I started working at the studio that I'm renting, I think I added the leaser's name to my insurance. So I just have liability. At first, I think I said liability and property, but now you're explaining it. Though his name is on my liability insurance, that's, I guess, the property is a part of the liability, right?
Yeah, so if you have someone requiring you to have it, especially if you're signing a lease or you're a tenant, yes, they're gonna name themselves as additional insured on your policy.
Okay.
And we'll talk about that. That is a mechanism that's used for risk transfer, believe it or not. Right, yeah. So there's a whole bunch of funny, weird ways we can incorporate these other things, the other 1 through 4 into the 5. And one of the most popular ways is additional insured. So I think we're getting into the weeds if we go there, but do know there is a way to to push risk away even when you're not in that transfer bucket. Okay, and those are the questions you definitely want to ask your agent when anyone's asking you to name them on their policy. A red flag should go up. I'm not saying don't do it, but questions need to be asked. First one, why? Right? My policy, why am I naming you? And remember, it's usually done on liability, right? So you already know liability is a third party, so the whole policy is for you, right? So why are you asking me to name you on the liability policy? The reason for that is added protection. They want to build in the transfer piece too, because if they're named on your policy, you're one and the same to an insurance company. You just extended your policy to them, right? So then what can't happen? Somebody just take a guess.
You can't sue them?
You can't. You can sue them. Close. It's another S word. And you went to Morgan, so I don't expect it. I'm sorry, that's my last one. It's called subrogate. So what happens is you name them on your policy, you're telling the insurance company they're me. So if they're you and something happens that's their fault, you're telling your policy they're me. So you just gave them another layer of protection. You just gave them some transfer on top of it. So you got to be careful what you're signing away. All right. I understand everyone wants to do the deals. And sometimes, hey, look, sometimes it makes sense. If the deal's profitable, sign it, take it. You're an entrepreneur, you got to make those decisions. But it's better to make an informed decision. So when anyone's asking you to name them on their policy, ask the questions. I saw a question about event policies. Absolutely, event policies. I love them. They protect your main policies. They're too cheap not to have most of the time. So whenever you're doing events, you want to explore event policies. The good halls and banquet halls and things like that are requiring them nowadays because they're just so easy. So yes, event policies, thumbs up for me. So we got the liability bucket. We understand what it covers, right? Everyone's gonna have their own examples because you all do different stuff, right? But that's essentially in a nutshell. It's money for someone else. Questions? If not, we can go to the 10-minute question and answer at the end. I'll move on to workers' comp. I think workers' comp, yeah. All right, workers' comp. Workers' comp is very, very misunderstood. Now, yes, you absolutely have to have workers' comp if you have employees, right? W-2 employees, it's a statutory coverage. That means it's regulated. The government says you have to have it if you have W-2 employees. What's usually missed is that you still have workers' comp exposure even if you don't have employees, right? And that's the part that you want to be aware of. So let's say you're starting this business, and you say, you know what, I can't afford employees right now, and I'm gonna go to contractors, right? Independent contractors, also known as 1099s. First of all, let me back up. 1099 is a form. And I don't know if you went through the CPA people yet. The CPA came on, 1099 is a form. Independent contractors are people. Please don't call your independent contractors 1099s, all right? They're independent contractors. You issue them a 1099. And I say that for a very specific reason. If you practice saying independent contractor, you would do a very necessary piece that will save you a lot of money in the long run, right? A mistake happens because you don't say the word contractor. And then the word, and the root word of it is contract. So in order to have an independent contractor, there needs to be a contract. Because if the state of Maryland says uninsured independent contractors equal what? Employees. Yeah, welcome to the great state of Maryland, right? Ambiguous language don't stand a chance here. So if you hire independent contractors and there's no contract in place that stipulates that they know they're independent contractors and you don't provide workers' comp, you don't get benefits and all the stuff that a contractor needs to know, then that person don't know, right? So if they're hurt on a job and they go down and file a comp claim and all that comes out, they're gonna get workers' comp, even though they weren't an employee. Uninsured contractors or underinsured contractors equal workers' comp for you. And I had this happen a couple years back where a contractor of mine got quote unquote, and I say quote unquote, I'll tell you why, fired from the job. So he went and put in an unemployment claim and he won, right? Because one, he didn't have a contract. Oh, no, he had a contract, but the contract wasn't adequate. It didn't stipulate all the things we needed to stipulate. And the other part of that is you also have to treat it like a contract. He was fired and that came out, right? You don't hire or fire contractors. You contract contractors, right? You don't terminate contractors. You terminate contracts or they're in breach of contract. So that language alone said, hey, this person was treated like an employee. Not to mention the general contractor gave them a schedule, gave them a break time. They were treated just like an employee would be treated. They were managed like an employee and they won. So contract and then how you treat that person. Remember, you don't hire contractors, you contract contractors. You don't terminate them. They're not fired. You manage the contract. So you can't put things in that contract like take your lunch at 1 o'clock. That makes sense? So yes, you have workers' comp exposure even if you don't have employees. Another thing I want you to write in this workers' comp bucket is employer's liability. Now, what happens if we hear that word liability? If you hear the word liability, what should you automatically be thinking? Who's it for?
Them.
Them. But what if it's employer's liability? It's on workers' comp. Who's it for? Third party, I saw that. The other person, okay.
The employee?
Huh?
The
It
employee?
is. But I just said not too long ago, it's never for you. So it's the company and employees are the company. How is this liability piece for them? There's only one way. So this would be the only liability piece where it actually pays the insured. And yes, if you're an employee for a company, you're the insured. If that employer is found negligent and had a hand in causing your injury. That makes sense? So workers' compensation has two parts. It has medical and indemnity. So if you're hurt on the job, there's money there to take care of your medical bills and go to the doctor and all that. That's the medical piece. That's the medical piece. The other piece is employer's liability. Okay. So if you're hurt on a job and then the investigation happens and it turns out that this could have been prevented had it not been for your employer's negligence, which means they had a hand in hurting you on the job, then not only do you get medical and indemnity and lost wages and all that good stuff, you also get employer's liability, right? You get to sue them and say, hey, look, you cost me this. That makes sense? I'll give you an example, a real live case. Had a client years ago, had a big fleet of vehicles, and one of my drivers smacked into a semi truck, right? Lots of injuries. It was really, really bad accident. It shut down 95. It was actually made the news and everything was bad. Now he didn't die, but he fought for his life for a long period of time. And he said initially when he gave his statement that he did hit the brakes, but the brakes went to the floor, right? And he slid in back of this guy. After all the investigation, they looked, the vehicle was already in bad shape, but they figured out that the vehicle hadn't been serviced properly, right? Not only had it not been serviced properly, because that's not negligence, that is a mistake and it will cost you. Not only had it not been serviced properly, they subpoenaed all the service records from the service contractor and the company, and they found out that the service guy who services the vehicles had been reaching out to them. They had a system in place that when it came time for service on the vehicles, they would automatically pull the person off the road and get it done, right? That didn't happen. And there were emails to show that the employer, the manager, just kept saying, every time they reached out to him, they said, now we'll do it next week, or we'll do it next week. Oh, we're busy. We got a lot of loads going out. We'll do it next week. And that happened after week after week after week after week. They kept pushing the service, and this guy almost killed himself. So that conscious awareness of not pulling that vehicle off the road, and then there's documentation that you had it, that the people were actually telling you, hey, look, this is coming up for service, and you said, no, keep it on the road, cost them millions and millions of dollars. So they got medical, indemnity, and employer's liability. That makes sense? So a couple things about comp. Yes, you have comp exposure even if you don't have employees, unless you do the subcontractor thing correctly, right? If you're not thorough with it and it's not done correctly, put them on as W-2s. It's going to cost you, right? Now, always get with your agents. Agents have the right documents and contracts and things to help you through that, right? Contrary to popular belief, and so, we have a lot of tools and resources. We're not just here to sell you a policy, right? Ask your agents, hey, how do I do this? What's going to happen if I'm audited? All this good stuff. Go back to the general liability policy, a bucket, and put auditable. Write the word auditable in that bucket. And also go back to workers' comp and write auditable. That just means at the end of every year, your insurance carrier has the right on these two lines of coverage to audit it and make sure they took enough premium. If not, you owe them money. If they took too much, they owe you money. Rare occasion in insurance that you will get money back. Commercial insurance, yes, they're only allowed to take enough premium for you to satisfy the exposure. For example, workers' comp is based on payroll. So at the beginning of your business, you may say, hey, look, I got one employee because I got one job and they're making minimum wage, $11.75 in the state of Maryland. So what's that, 22 grand, right? But let's say in the middle of the year, you hire another one because business is good. You got another job. Now you got another guy making $11.75. The insurance company is not going to change your policy in the middle of the year. They're going to audit you at the end and say, okay, you started with one employee at 22 grand. You ended up with two employees at 44. We only took premium for 22. You owe us money, right? That's not robbery. That's just fair, right? It just has to happen. They covered that employee. So if that employee was hurt, everything would have been fine. They were listed on policy. You just owe them more money. Questions about, who said, whoa? I love that. Somebody put, whoa. Teresa, is that you? Yeah, that's Teresa. Teresa, what's that about? What's the whoa about?
It was just the example that you had provided about
Oh, yeah.
the car accident on 95.
Oh, yeah, that's real.
Yeah, manager making I mean, I hear it every day. My husband is a plumber, and I can't tell you how many times he's like, they need to fix this truck, and his supervisor is telling him to go get the job done.
Man, look, I will keep my fingers crossed for him, but they need to get that truck fixed.
Yeah.
Yeah, but those are real life examples. I have tons of them. Somebody put shaking my head. I'm assuming that's sort of the same one. All right. So we'd already talked about comp. We talked about GL. Let's go to property. Property of these 4 buckets is your bucket. Yay, we finally got to a bucket that's actually for your stuff. You know, this is real simple. It's all about your stuff, the stuff you need to run your business. That's your responsibility. Nobody's going to tell you what to cover. Nobody's going to make you require it, you know, unless you have unless you bought a building and you have a mortgage. Outside of that, your stuff is yours to insure. So you get to come to the agent and say, hey, look, I bought this piece of equipment. It cost me $1 million. I got it mortgaged over here, boom, boom, but if something were to happen, I need to make sure it's taken care of. And then we're going to assess it and make sure we put that limit on the policy. Real simple. The one thing I want you to put in this bucket is property is defined as tangible and intangible. So yes, we're talking about equipment and computers and sofas and things like that, right? We're also talking about intellectual property. We're also talking about, and this is the most important one to me, and it gets left off all the time, money, cash, right? Cash is property. It needs to be on your policy. And I'm still surprised after almost 20 years in this business, how many times agents do not consult their clients as to loss of business income. That is property, should be listed, right? If you have a retail space and there's a fire and your business has to be shut down, yes, it's going to be taken care of. All the stuff that got burned up is going to be taken care of on the property, but you can't operate for a month. And if you were operating for a month, you would have made $12,000, right? That's loss of business income. You get to put a claim in for that $12,000. So that you want to make sure that when you're talking about property, we're not just talking about tangible stuff. Intellectual property, intangible property like money, accounts receivable, things like that also are included on property. And those are questions you should be asking your agent. Okay. When you're talking about leased space, the easy way to figure out property versus contents, because there's building and then there's content. So you see a property policy, you'll see building, you'll see content. If you own the building, there should be a limit there. So if you no different than your home, right? If you own your home, let's say it's $1 million home, the rebuild is $1 million. You'll see a limit on your policy for $1 million. That's what it costs to rebuild a house. But then you'll see this other limit called contents. All that is the stuff inside the house. So if you were to pick up that building and shake it, everything that moved is your personal contents. Everything that doesn't move is the building structure. Same thing with the business. Now, if you're a business and you don't own the building, right? Let's say you're leasing it from someone, you still should have that second limit because the stuff in the building is yours. The money that the building generates is yours. Okay. Questions about property. Property is the easiest to write because it's your limit. You're getting with the agent and you're assessing it, and you guys are having a meeting of the minds. However, it is the most underpaid from a claim standpoint. That means that when a claim happens on property, it is the most underpaid. The reason is there's not, and I'll take this for my whole industry, there's not a good job at explaining to you guys what property entails. So then these policies come across with building and contents. And there's a bunch of other stuff that can happen with property and you don't get payouts. So I would say, don't be afraid of it. Go in saying, hey, I got this equipment, I got that, and I want to cover it. But then also say, what else am I missing? Like, what else could I insure under property? Make your agent tell you all the other options. Questions on property? Again, property is your stuff, everything you need to run your business. All right, commercial auto. I left commercial auto for last because it really is the easiest. Well, it's not necessarily the easiest. It's the most familiar because you guys have cars, right? Vehicles. And it's written very similar to personal auto. The difference between commercial and personal is just business use, right? So it covers property damage, liability, and injuries, like any other auto policy. Liability, property damage, injuries. Now, the liability may be written differently, right? Commercial policies, you won't necessarily see the 3 limits. You might, like you do on your policy. Your personal policy probably says like 100, 300, 100 or something like that. On commercial policies, you're probably gonna see one limit. It's called combined single limit. So they may add all those numbers together and say, okay, we'll just give you a combined single limit of $1 million, right? Underwriters on the commercial side aren't in the business of putting stuff in all these separate buckets, right? You had an auto claim, you got $1 million. So you may see that difference. Now, there are a couple of nuances from personal to commercial, okay? One being hired and non-owned. So when you have a business, and let's say, because this is where you have auto exposure, but no commercial cars, right? You have no car that you use for your business, but you still have auto exposure. And it's called hired and non-owned. So let's say you have, someone that works for your business, W-2 or contractor, and you say, hey, you know what? Do me a favor and go do this bank drop, right? Or go pick up donuts for the crew, right? What you just did was hire that person's vehicle for the use of your business. That makes sense? So anytime someone's driving for the purpose of the business, that vehicle is used for the business. That is temporarily used for the business. And it happens all the time. It gets missed, but big claims happen. You got to make sure you have hired and non-owned when you have these commercial autos, even if you don't have commercial vehicles. Right? Now, it's more prevalent if you have employees and contractors. If you're a business of one and you don't have employees or contractors, I would probably say leave it off until you get that, because you're the only person driving for your business, right? But if you hire someone, you contract someone, or people are out there operating on behalf of your business, get the hired and non-owned. I mean, it's probably $40, too cheap not to have. And people do it all the time. You don't even know what you're doing, right? Telling someone to go pick up donuts and coffee for the crew is hiring their vehicle for your business. They hit someone on the way back, it only takes a couple questions from an adjuster to find out that person was at work. And as soon as they find out that person was at work, that's a whole nother bucket of money. It's miraculous how big the claims get on a commercial side as soon as the claimant finds out that there's a company involved. Now, here is, if you wrote and I don't know which order everyone wrote their buckets, but it's four, so you should be able to connect them. draw a little teeny dotted line between property and auto. Because there is something that connects them, and I know we're running short, we're pretty much done. There is a policy that connects these two. It is called inland marine, I-N-L-A-N-D, inland marine. And this was invented because the property policy and the auto policy excluded some stuff. So your property policy used to exclude any of your property that moved. So if it was in transit somewhere, it wasn't covered under property years ago. It had to be covered under auto. Well, auto said, hold up, that's not an auto exposure, right? It's not auto exposure, that's property exposure. So it's a bunch of infighting, and then they finally said, okay, let's create something different. So anytime you have business personal property, let's say you take equipment to go somewhere else and work. Contractors do this all the time. Contractors work on other people's job sites. They don't necessarily do their work in their office, but they travel with all this property. Basically, all the property and tools that they have for the business, they travel with it. Okay, it wasn't covered up until in the marine. It was a gap in coverage. So now there's a property endorsement, an inland marine endorsement, where you can say, hey, look, I got all this property, but it's in my vehicle or it's on someone else's job site, right? I need coverage for there. I need coverage if it's stolen there. I need coverage if it's in an accident and damaged in my car. That's inland marine. So if you have that exposure, make sure you're asking on the property policy, hey, I need an inland marine endorsement. And they're going to say, okay, how much equipment is traveling? Like, how much are we talking here on average? If you're a painter, you may say, hey, look, man, all my rollers and paint go, it may be thousands of dollars, thousands and thousands of dollars. If you're a sales guy like me, it might just be a laptop. You know what I mean? You have to assess it and get with them. The key thing is you have to get that little thing that connects auto and property if your property travels for your company. Now, if all your revenue comes from people coming to you in your space, that's different, but if you have to go out and get it and take property with you, you need inland marine. Those are the 4 buckets. There's tons more. I don't want to get too much in the weeds, but again, the theme is, what bucket do I live in most? And regardless of what people are telling you to get, because I heard the words requirements and things, as you get into this, people are always going to be asking you to have stuff. They're either going to be telling you need requirements to do the job. Everyone's going to be pulling you in so many different directions with insurance. And I'm not saying don't do that. I'm saying know what's for them and then know what's for you, right? Yes, they're going to say, hey, look, go get this umbrella policy because we need it. But remember, that's for them. You should be knowing and starting to ask yourself, what do I need for me, right? I got a bunch of property. No one's going to require me to have it. I need it for my job, right? No one's going to say, go get professional liability. But guess what? After I did this exercise, I'm most vulnerable. I'm more professional, right? So you need to know what you need for your company before you can get anyone else what they're asking you to have for the job. That's where a good agent comes in. Questions? I think question and answer opened up. Any questions about anything, risk management, insurance, or otherwise? Again, I was an entrepreneur forever. I ran my own shop for years, so ask me any questions about any of that. Somebody's calling their agent tomorrow. Nice. Shelly raised her real hand, y'all, and then unmute.
I raised my hand on the thing and it just.
Hey, Shelly.
Hey, so my question is, all of these things are really good. I know, I feel like you have to have your own personal life insurance if something happened to you as the employer.
Mm-hmm.
A lot of these, to me, have to do with other people and protecting other people that are involved with us and our services and things.
Mhm.
How does that work for protecting you other than your stuff?
Right. So, couple things. Yes, for starters, life insurance is for someone else too. Let's be clear. But there is a commercial life insurance piece. It's called key person. So if it turns out that there's a key person to your operation, yes, you have a vested interest that they have a life insurance policy. If that person were to pass away and you could show that that person is pivotal to your organization financially, you can get a life insurance policy on them. I've had them on my agents for years. It's called key person. So then you go to your agent, you get a life insurance policy telling you want a key person. Then you have to assess what that person is worth and what you would be losing if that person passed away. And it's real simple. And then obviously after that, they go through the regular underwriting, life insurance underwriting process. You know what I mean? But yes, you do as a business owner have the ability and are allowed to get policies on individuals that you wouldn't normally be able to get them on because of vested interest. Key person.
So I have a question about that. I do watch a lot of stuff. Okay, so my question for that is, do you have to? Because I used to sell life insurance, and I know you had to have the other person's consent. But in this scenario, for business, key person, insurance, do you need their consent? I mean, because you said you had insurance on your agents.
Mm-hmm. So consent is the wrong word. In Maryland, you don't need permission because Maryland is an at-will employee state. So as long as they know that when they sign this employment agreement, they understand that you can get insurance on them, you don't need permission. They took employment with those conditions. Now, do you have to disclose it? Yes. Disclosure is the right word. You do have to tell them because they got to participate in the process. They still got to get underwritten, right? But you don't need to say, hey, I want to get life insurance. Are you okay with that? No, you took employment, so you are okay with that. Now, your options are, because you don't necessarily, because it's at will. You don't necessarily, if you don't want me to have a life insurance policy on you, then we got to talk about whether or not this employment makes sense. So Maryland's at will.
So are you saying that all Maryland, like a lot of Maryland employers have insurance policies on their employees?
Oh man, you'd be surprised how many. Oh yeah, absolutely.
I never knew that.
Wouldn't necessarily be surprised. It's standard. It's practice. Key person insurance. If you go, let's say one of you.
No. So I understand key. So maybe what I'm misunderstanding is what key person insurance is, because I thought key person was like, okay, hey, this person is pivotal. They're maybe the leader. They're the CEO, the CFO, somebody like that. But an employee, I didn't know that an employer.
Titles, and I hear that a lot. Sorry, I mean to cut you off. It is not title driven. Get that out. A key person can be anybody key, right? I've had them on my top sales producers. Right? And so in the event that they pass away, is it only if they pass away, or is it if they quit, if they? No, it's life insurance.
Okay, so in the event that they pass away, then the company gets paid the amount of money they would have lost, I guess, in production from that person.
If it's a salesperson, it's production, usually in equity. If that person owns portions of the company, right? Because I have to, let's say I have a partner, that's a key person. If I own 51% and you own 49 and you pass away in the state of Maryland, your wife or spouse or significant other gets to 49. If I have a key person policy, now I have the money to buy back that 49.
Gotcha.
Right. Or
no, I totally get that. It's the when you say get like don't worry about the titles, like that kind of like blew my mind. I never knew that just a regular salesperson, you would have insurance.
Here's the thing. If they need key person, I promise you they ain't no regular salesperson.
Okay.
You know what I mean? And I'm not saying that it can't happen on any salesperson. I'm saying typically it is someone that's gonna cause the business financial hardship if they were to pass away. I have had key person policies on salespeople, and I have also had them on me. You know, but the business has the responsibility of showing the underwriter that that person is a key person. Key is the key word. Show me the hardship that this person's death would cause you. If you're a partner, yes, it will cause me hardship because I got to get the money to raise to buy that significant other out of their portion, right? Or that person is my number one producer and they have 1% equity in the company. I have to feel that if that person passes away. That's a great question because usually these things don't take me into key person. That's a good question, Shelley. But to your point of different statutes, it is different across state lines because Virginia requires sign off and DC does something funky too. I'm not sure, you know, I can't really, you're allowed to get them in DC, but it takes a lot more paperwork. But yeah, key person is a thing.
Hey, DeCarlo.
Hey, Nick.
Yeah.
Oh, well, it wasn't really a question. One, I wanted to just thank you for this conversation. And I ended up pulling up one of our liability policies to make sure that my income was covered.
Wow, on the property?
Yeah.
Yeah. You'll see loss of business income. It may have a limit there, or it may just say ALS, which is actual loss sustained.
Yeah, it's something about 12 months.
12-month period. So what they're saying is they're covering your, if your business has to be shut down for a year, they're covering up to a year, basically. If your business has to be shut down longer than that, they're saying, okay, you know, you got to go and set up shop somewhere else.
Right. Yeah, but this was an awesome discussion. Just really wanted to thank you. And I'm still calling her in the morning.
Hey, there you go.
Okay, so I'm not sure.
If you don't pick up, call me.
I'm not sure that this will make the recording or the videotape, but sexy DeCarlo Harrison, thank you so much for your talk tonight.
I appreciate
we really
that.
appreciate you lending your time and your expertise. And as the lady said, this was extremely valuable. We placed in the chat you know, your contact information. So if if you're taking additional questions, DeCarlo, I'm sure that the ladies will be able to reach out to you. I just want to encourage you all to continue to stay with us because next week we have another powerhouse, and that's Lisa Anderson. And if you haven't heard Lisa Anderson talk, oh my gosh, somebody who went from, what was it, Chloe? 15
employees to making over $1 million in a year. So she's got a testimony, guys. And
oh my goodness. So you might want to hear that if you're trying to make that more than the pitch money. If you're trying to make more than the pitch money, you wanna listen to Lisa Anderson's story. I also want to give attention to the chat because we have another member who is going for an award here and is looking for you to help her in that quest by voting for her business. So if you look in the chat, Janet here is looking for, okay, well, I've never seen Janet do that before, but okay. She's excited and we're going to be excited for her. We want to vote for her business so that she is voted to the top. We want to take all our members to the top. So if you have something like that going on, please let us know in advance so that we can help you in your quest. And with that, my ladies, because it has been like a very long day today as we prepared for you, and we're gonna get ready for the next week coming. We want you to continue to have a great evening and get prepared and get ready because there's nothing if anything, preparation, if I could say it, preparation. Even if it's insurance, you still need to be prepared to have insurance to be prepared. You want to be prepared for the pitch. So anything that is up and coming, as well as what has transpired, will be vital to what it is that you need for pitch day. Okay? So thank you again, DeCarlo. You've been great. We appreciate you, and we appreciate all of you ladies for joining us. And we will see you next Wednesday at 7 o'clock. Thank you and take
Thank
care.
you for having me, ladies.
Have a good evening, everyone.
Thank you so much. Good night.
Thank you. Good night.
Good night.
Bye.